Have you ever heard about Wallstreetbets? So what is it? Wallstreetbets, also known as WSB, is a subreddit where participants discuss their stock trading ideas and opinions. It has become known for its filthy nature, aggressive trading strategies, and the role within GameStop's short-term crash that has led to short-term losses to US firms exceeding the US $70 billion within a few days in early 2021 goals. Today we will get the info that how crazily the short squeeze by Wallstreetbets increases GameStop and AMC's price. So welcome to Luxury Mojo. Before we continue, make sure to take a moment to subscribe to our channel for more content like this in the future. And don't forget to click on that bell icon to be the first to know when our new videos go up. Now let's see how the crazy short squeeze by Wallstreetbets increases the price of GameStop and AMC. Wallstreetbets is now reshaping financial markets in three important ways. Amateur market participants or commercial investors do the traditional work of financial advisors, analysts, and educators, changing who does that in the market. They introduce new ways of thinking about investing. They also strengthen the influence of investors who sell across the board. These new investors are selling and promoting a special way of worrying about investing. At least a few members of Wallstreetbets, investing in partial betting, partial jokes, run by troubled Redditors, and a get-rich-quick scheme. As of March 30th, 2020, subreddit has approximately 1.1 million users. Members gather here to talk about the store, about the market, share external memes, and peppered with a simple heart support and equal support. Often, the aggressive community has established the largest and most reliable base of users on the platform. Let's see how to trade in Wallstreetbets. The preferred trading method for subreddit is options trading. Options are contracts that give the contractor the right to buy or sell, depending on the type of contract. The property is at a fixed price, strike price, for a certain period of time. This is usually sold in sets of 100 contracts that give the owner the right to buy or sell 100 units of the underlying property. There are two types of contracts: enter options and call options. Call gives you the right to buy goods at agreed prices and allows you to sell goods at an agreed price. But if you think an asset is going up, buy phones, and if you think the asset is going down, buy a set. Wallstreetbets users are known to buy cheap options that are almost out of date and have run out of money. These tend to cost surprisingly as little as $1 because they are unlikely to be profitable. This is like lottery tickets because it often leads to a loss of contract costs, but sometimes it is paid well. The riskier option is that they are more sensitive to changes in a commodity price as each contract controls 100 shares of the asset. This allows users to increase their rewards, but also increase their risk. A $1 drop in stock prices could mean a $100+ loss for someone holding the call option. Wallstreetbets users play a high-risk game with a high reward, which often reflects more on gamblers' behavior than on investors. Wallstreetbets' third place. It is helpful to view Wallstreetbets as a third place, as Oldenburg described in his 1999 book, The Great Good Place. Oldenburg defines third place as separate from first and second places for home and work, respectively. These third-party sites also have Wallstreetbets 13 with several additional features. 1. They are neutral. 2. They are places of balance. 3. Conversation is a key activity. 4. They are available and readily available. 5. Those who do so set a tone. 6. They maintain a low profile. 7. The situation is playful. 8. They are home away from home. Wallstreetbets seems to fit right into this foundation. An example of Wallstreetbets. Some names appear in the early business period. BlackBerry shares have risen about 280% this year. Stocks at AMC, a series of movie theaters, have risen by nearly 840%. But David versus Goliath's eco-friendly trade currently involves GameStop. Recently, the fine people of Wallstreetbets decided GameStop was undervalued and the stock would go up, so they put a bunch of posts about how they were trying to buy GameStop options, This drove up the stock price for GameStop, as their counterparties had to load up on stock to balance, and then more stock as more people bought options and so on. The soaring stock meant some shorts had to cover, sending the stock up further. As of January 26, the short sellers have been trolled out of about $5 million in 2021, just from their GameStop positions alone. Reason for adding price to GameStop, AMC, and others. Many investors are fans of the popular Red, Bets, and the Dirty Word Reddit page have raised the issue by coming together to reduce at least 2 hedge funds that the GameStop shares would fall. While hedge funds and other professional financial managers have been cutting GameStop stocks down, betting that its stock will further decline, retail investors, online retailers, mother and Pope investors, small retailers, and others have been pushing the other way, buying stocks and stock options. As a result, GameStop's market value has risen more than $24 billion from $2 billion in just a few days. Its shares have risen by more than 1,700% since December. Between Tuesday and Wednesday, the market value increased more than $10 billion. It's a risky trade. When the stock goes up, the short seller is exposed to theoretical losses. After all, stock prices can continue to rise and can only fall to zero. As a result, when betting does not go well, short-term traders rush to repurchase the shares that they have borrowed so they can repay and exit their jobs, a process known as coverage. And this is what's happened to GameStop. Let's see what happened with GameStop. Shares in GameStop, the video retailer, have plunged from January highs driven by social media memes. In January, amateur traders on Reddit encouraged one another to bet heavily on the company's stock, sending the prices up more than 1,700% at one point. The wave was partially intended to hurt large hedge funds shorting GameStop stock or betting against it. As a result, some of these funds incurred substantial losses. Individual investors who pumped up the stock, on the other hand, could lose a lot of money. Even though the stock price has fallen, some investors expect that the price will rise again and refuse to sell. Regulators are now reviewing how the rally began and whether new laws could be enforced as a result. Many of today's adults spend their childhoods shopping at GameStop. They waited in line for the consoles to be released. They even purchased and sold video games there. Some of those gamers are now millionaires after purchasing GameStop stock and urging their Reddit mates to do the same. In the last few days, GameStop stock has risen higher than anyone could have predicted, thanks to the increased activity among social media investors. Wall Street had made significant bets on the company's failure, but investors were forced to change their bets as the price rose. As a result, the stock shot up and then swung wildly. Even though the stock price has fallen by more than 30%, several Reddit users claim they're purchasing more GameStop stock because they think it will continue to grow. Just alone one day, GameStop stock hit an all-time high of $492.02 per share, only to drop by more than half a minute later. It closed trading at $325 the next few days. Alright, that is all for today. If you want to grow up financially and cultivate a millionaire lifestyle, make sure you are subscribed to our channel for more videos like this in the future. And make sure you click on that alert bell icon so you know when our new videos go up. Let us know your thoughts in the comments below, and let us know what you think and what topics you want to hear more about. Thanks so much for watching!